Another day and another bond sale for Italy. Rome's borrowing costs fell from record highs as it sold €7 billion of debt. But cautious investors still demanded almost 7% to buy 10-year bonds. That's down from just over 7.5% a month ago, but a level still seen as unsustainable in the long term, says Reuters correspondent Steve Scherer.
Today's bond auction was a little disappointing considering the short-term lending of the ECB last week, 490 billion. It didn't seem to show up on the 10-year yield, which was at about 7%. A little bit of an improvement from the last auction a month ago, but not a great improvement as we saw yesterday in the short-term bond sales.
European shares were steady after the bond auction, but investors remain cautious about the continuing high yields, and banks which have high exposure to peripheral Eurozone debt were among the worst performers. Regaining market confidence is one of the many challenges facing Italian Prime Minister Mario Monti in 2012. The Italian Parliament approved Monti's emergency austerity budget just before Christmas, and he's promised to tackle Italy's chronically low growth. He told reporters at an end-of-year news conference Italy needs to work with Europe.
The
problems the markets have today are primarily problems of a European nature, and so a common solution needs to be found, one that is unified and firm. This solution couldn't have even begun to be found within Europe, the responsible authority, if Italy, the third largest economy within Europe, hadn't got its public accounts under control.
James Buckley from Baring Asset Management says the Italian economy will probably contract in the final quarter of the year.
There are some positives for Italy. It's not insolvent. The GDP, the debt as a percentage of GDP is much lower than the UK, for instance. But the sheer amount of debt that's outstanding, the maturity of that debt and the slowdown in the economy are all very real issues.
Italy has to refinance €450 billion of debt at the start of next year, and analysts will be watching closely to see how investors react to Rome's austerity measures. Joanna Partridge, Reuters.